Hi everyone, and thanks again for joining us on Industry Disruptors. As always, Jordan Wiley is with me. I'm Ajay Nair, and today we're going to be discussing using finance to your advantage. Because it's not really a disadvantage now, is it? Let's be honest.
No, some people think it is. They're scared of debt. Ooh, don't want to be in debt.
Scared of debt. Wait, didn't you meet someone just this past weekend where they're like, oh no, don't do mortgages.
Don't believe in mortgages.
Don't believe in mortgages. Oh gosh.
I didn't really know what to say.
Did you get into an argument?
No, I didn't want to get into an argument at a barbecue.
Oh, okay. Fine.
You would have.
I would have. Yeah, absolutely.
I was too interested in my hot dog.
Using finance to advantage, right? I mean, gosh. The stigma, hey? Bad debt, good debt, bridging.
I think it's generational. It comes from the parents.
Well,
it definitely came from my parents, not your parents.
I was going to say, my parents actually took out a bridging loan, I want to say, around 2002, 2003, to buy a buy-to-let.
Yeah. Whereas my parents have never been £1 in debt in their entire life. And if they did, they would have a small heart attack about it.
Yeah, so very different parents. Mm-hmm. And my mum was a gangster.
Yeah, she still is a gangster.
Yeah, she's brilliant. Yeah, they took out a bridging loan. In fact, they used their home as collateral to, so essentially a second charge bridging loan on their house to buy a buy-to-let, and then refinanced it out. I want to say about 8-9 months later. To be honest, it was probably longer than that. It might have been a 2-year second charge that they did. Decent property, not bad.
It's about knowing the difference between good debt and bad debt, though.
Yeah, so, yeah, but then this is where it gets really controversial, especially with the FCA, right? Because the FCA would say, you're buying a house with a mortgage, you must do everything to pay off that mortgage as quickly as possible. I'm taking my mortgage advisor hat off, FCA. I'm not a mortgage advisor right now.
Imaginary hat.
Now I am a property investor and a general public human thing.
Audience member. I'm actually the host.
There you go. I'm the audience member. And having a mortgage on your house is the worst debt that exists.
I was literally just about to ask you. I was about to prompt you for that.
Like, your house is the biggest liability that you own, right? Because it costs you money. So you've got your gas, your water, your electricity.
Your mortgage.
All of those things are an expense. And what else is the expense? The mortgage. An expense. Out of your own pocket into nothingness. Right? Bad way of going about life.
Because then what happens is you pay off your mortgage and you've got your house that's worth, say, 400 grand. Then what?
You take it to the grave.
You die.
Bruv. No, when you die, you get that house, you collate it, and you shove it into the grave and you die with it. That's what happens.
Yeah, so what's the point?
And that's my point, right? The biggest liability
Your kids end up with it, and then they've got
liability.
Yeah.
If it's not making you money, it is not a good thing to have. So your own personal house is the worst thing to have because it doesn't make you any money ever.
No, it just drains you of money.
Yes, because you take out £100,000 mortgage and you're paying back $236,000 over 35 years or whatever it is, whatever the calculation is. It's not far off.
Yeah,
I'm not that bad.
However, if you rent your own property, and
you can use all of that money use as a deposit,
and go and buy a lovely portfolio that earns you enough money to quit your job if you wanted to.
So I'm gonna give you very vague figures right now. If I sold my house tomorrow, I would have enough money to buy a portfolio of approximately 80 houses, which would bring me over $500,000 per annum net.
Yep. And then you could rent
a castle for 10 grand a month.
Yeah, and it would be paid for by your portfolio, and you would still be able to have a wonderful life.
No expenses, no liabilities, right? Because it's all paid for by my portfolio. So not only am I creating 80 beautiful houses for tenants, yeah, because I'm not one of those slum dickhead landlords.
No, we're taking crappy houses that are crappy or just left there doing nothing, making them into beautiful homes for people who really need homes in the UK because there's a shortage.
Yeah, and it's like, it baffles me how people don't understand that. I just don't get it. So anyway, good debt, bad debt. I would say bad debt is the mortgage that your house that you live in. Unless you capital raise and buy other buy-to-lets.
Or you have an interest only.
Well, I've got an interest only because that's just
if you're going to have a mortgage and it's the right thing to do for your circumstance, then interest only is probably one to look at for your residential.
Yeah. So yeah, that's so that was we touched on it on a previous episode where you said using collateral in your house to buy a portfolio. I think that using that to your advantage is great. Mm-hmm. It's a great way to build a portfolio. It's a great way to actually grow something, whether it be for yourself, for your lifestyle, for your children. I know I've got clients who all they do is they buy houses for charities, for the government and for councils, for social housing, DSS tenants, people less fortunate so that they have somewhere to live.
Yeah.
Yet these landlords will be absolutely demonized by the dickheads online who are just jealous motherfuckers. So many trolls. They're just jealous. It's just simple because they can't do the work. They don't know how to do it themselves. So they will hate on absolutely everyone they possibly can. Oh, you're a disgusting landlord. You're this, you're that. How am I a disgusting landlord if I'm helping 80 people get off the streets and into homes? How?
Well,
you're making a profit doing it. Well, bitch, I'm not free. I don't do things in life for free.
Yeah, but you're never
the amount of hard work I've got to put into that to help someone, like, why should I not be compensated?
You're never going to get criticised by someone doing better than you.
No.
And that's how you have to. That's how I look at it, because there's a lady that I follow on TikTok, and she is very much of the mindset of us.
Okay.
She does videos about exactly what we just spoke about not buying a residential, and how to invest correctly. Just
she's a property investor.
Yeah, she is. And I follow her videos just because they popped up on my. I don't actually know her name.
Oh, wonderful. What's her TikTok handle?
I can't remember that either. I know her face, but she popped up on my algorithm, and she was the first person I'd ever seen on TikTok that was talking sense. I'd never seen anyone talk about what we talk about. And the trolls on her comment section were unbelievable.
Really?
Yeah. And like, she handled it like a boss, like how she was responding.
She's a boss lady. Can we get her on here?
I mean, I don't know. I think she's from up north. She's got a northern accent.
That's fine.
I'll find out more about her, but she's very good. And all I kept thinking was, it's because you don't know, and you're just like, oh, you're a dirty landlord and you're greedy. And it's like, yeah, but don't you rent? So if there weren't any landlords, where are you going to live?
Yeah, absolutely. And that's the thing. They don't think of things like that. You see it that with tenants where they... Do you remember that video I sent you the other day, or that tenant who was loving his life because Labour are going to destroy landlords and all the rest of it? I was like... Bitch, where are you going to live?
Yeah.
Where are you going to live?
Well,
if a landlord said, right, I'm selling this property, where are you going to live? Where are you going to go?
Yeah, exactly.
So if all the landlords disappeared from the UK today, what happens to society?
It crumbles.
How many homeless people exist?
Too many.
Right?
And we're talking, there are terrible landlords out there.
Yeah, there are.
We see them. But
that's the thing. Our clients are buying off these terrible landlords.
Yeah, I did.
To get rid of them.
Look at the Del Boy that I bought off.
I know. Look at the portfolio that I got. That was absolutely horrendous. Had to spent 80 grand so far refurbishing these properties, and there's still another refurb to go.
Yeah.
Because they're terrible condition. How these tenants are living there, I don't know.
Yeah. Well, one of my properties that I just refurbished, that I bought off that Del Boy landlord, did it up, you've seen it, it's to a beautiful spec, and just got a tenant in there. It's a 3-bed flat, and the tenant actually wrote into the agent and said, this is just the best rental property I've ever been in. I'm so happy, and I just want to stay here. He's just like, thank you.
Yeah.
I was like, well, that's what it's about, because I've taken literally a piece of garbage and turned it into someone's wonderful home. And look how grateful he is. That's what it's about for someone who's a a true landlord.
Yeah. There are a lot of idiots out there, but I mean, the problem is they're always going to make it. We get a bad name because of them.
Yeah.
And I will say it to their face. I mean, the guy that I bought the portfolio from last year is disgusting. Mm-hmm. He was disgusting. Like how he can keep those properties in that condition for tenants and
damp and mold and
what are the tenants supposed to do?
Yeah,
they've got nowhere else to live.
Exactly.
Like it's unbelievable.
No one should be able to live in those conditions.
Yeah, it is disgusting. But the trolls don't give a fuck. Every landlord.
No, but they're all renters who just aren't. They either have a Del Boy landlord and they don't know any different, or they're just not educated on what being a landlord is actually about. That's what I've found with it. And I mean, that poor woman on TikTok was getting more. I'd say 80% of those comments, if not 90%, were her just being absolutely destroyed.
Really?
Yeah.
And she handled them all.
Yeah.
Brilliant.
And she continues to do videos.
We should try and get her on.
Yeah, I'll find out her name, really, shouldn't I?
Do some.
I'm so engrossed in her videos, I haven't even looked at what her name is.
Yeah, do some research.
Yeah.
But yeah, I guess when we talk about using finance to your advantage, it's whether it's a bridge, whether it's a mortgage, whether it's development finance. People don't realise how advantageous it could be. But not only just from the perspective of, it means that I don't have to put as much money into that property as possible, but also what it can do in order for you to grow, right? By leveraging.
Yeah, absolutely.
I have conversations with people who have been brought up in the way of no debt, no mortgages, people, our age and stuff.
But then they're buying one property per year because they don't have the funds.
But when I explain to them what is possible and how to do it, they're just like, I didn't think of that. And it's really interesting to listen to what they have to say about it and what their thought processes are. This is why I was interested about your barbecue dude.
Barbecue dude.
Yeah, your barbecue dude who said he didn't believe in mortgages because...
Well, I think that was maybe a culture thing and old ways.
Yeah, it's like a parent thing that's kind of taught.
Because he was from an older generation, and that's, I think they were probably taught, don't get into debt buying cash.
Gosh.
Yeah, I wasn't going to get into it because I could have got a bit passionate about it.
I couldn't do it. But the one thing that frustrates me, so in the south of England, it's very difficult anyway to build a portfolio because the values of the properties are way too high. Yeah. The rents are not high enough. But where you see people are actively looking to buy property for £300,000-500,000, I guess, like £1,000 rent.
Do you remember that one I had? And he was buying a £1.1 million buy-to-let.
Yeah.
It's like 7 bedrooms.
Yeah.
And I was like, why? And he was like, because it's 1.1 million. I was like, well, that's great.
It's basically, I've got big bollocks because I own a £1.1 million buy-to-let.
But the rent stress didn't meet, so I couldn't even get, I could get about 50% loan to value on it.
And I think you could get that high even.
Was it even that?
I think it was 45%.
There were too many bedrooms for a buy-to-let lender to even consider it.
Yeah. No, I think it was 45% loan to value, but in the end, no one would take it because it's 7 bedrooms.
No. And then I think he just didn't believe me and wanted to go to another advisor because he thought that I couldn't do it. And I was like, no, it's just, I said to him outright, I said, I'm taking my hat off for a moment. Like, this isn't a great investment. You're leaving like hundreds of thousands in this deal for like, and his mortgage payments compared to his rent, he was going to be cash flowing net £1,000 a month on a 1.1 million.
A month or a year, you mean?
No, a month. £1,000 a month he was netting.
That's good cash flow.
On 1.1 million?
No, as in, that's good. It's £1,000 a month. No, that's what I mean. From his perspective.
Yeah.
He's saying that's
I thought you were saying that's a good investment. I was about to kick him off the show.
No, from his perspective.
Oh, yeah. He's thinking, I get £1,000. But I'm thinking I can get that cash flow on 2 properties worth 80 grand in the north.
Yeah.
So, not good.
No.
I tried to explain that and he just wasn't having any of it because his dad was in his ear about, no, we need to buy in this area. We need to have this good property.
Yeah, but see, when I break it down for clients in exactly that way, when I'm just like, okay, great, you're buying this property, it's £380,000 and you get, and your your gross rent from that is £1,300. So £650, yeah? I can buy a £70,000 property in Scotland, in the northeast, in the northwest, wherever.
Wales.
In Wales, that will get you £650. A £70,000 property that will get you £650. Right? 2 of those is £140,000. There's your £1,300. Why on earth are you spending £380,000 when you can spend £140,000?
Exactly.
And it just comes down to prestige.
Yeah. It's ego, right?
It's massively ego. A lot of the time it is massively ego. Why do you think, so a couple of my friends, obviously recently, I've helped them buy copious amounts of properties in the north because they were like, wait, Ajay, what are you doing? Yeah, I'll have a bit of that.
Yeah.
And it's just like, let me buy. Why? Because it's £70,000. I'm putting like 15 grand into the deal and I'm getting £650 a month. Yeah, I think that's all right, actually. Yeah. You know what I mean? So when I break it down for some people, like these guys, they're like, yeah, let's do it. I'm in. Let's buy them. Let's buy as many as we possibly can. And then you get some people who are just like, in the north?
Yeah.
And they look down upon it. I'm just like, you're so amateurish.
It's a business.
I was like, you're so amateur. You're like, your inability to understand and comprehend what property investment is today is unbelievable. Because you're thinking it's 1980, right? And properties are worth 80 grand in the south, and they're going to be worth 500,000 in 10, 15 years. Okay, great, but you're going to pay capital gains on that. Oh, well, I'll buy it in a limited company. Okay, great, you pay corporation tax on that. Okay, yeah, but you're never going to sell it, are you? Because you think you can carry it, shove it into the grave and go down in there, right?
Yeah.
Let me take this property to the grave. And the problem is, I've got £500,000 property, which has got 350,000 equity, because I can only get a mortgage for £150,000 because the rent's only £1,200 a month. And people don't realise it doesn't matter what value the property is. The loan to value is not based on what the value of the property is. The loan to value, your loan amount on the buy-to-let investment is based on your rent. Your rent dictates it. Yes, there are a couple of lenders that will do top slicing, where you can use your income and all the rest of it. But would you really want to use your income? You're basically saying, I want this buy-to-let property so that I'm paying £1,000 a month towards that property every single month.
Yeah.
To maybe think that in 15 years' time, that property might go up in value by £50,000 to £100,000. That may give me the opportunity to sell and create a large profit on which I then have to pay tax on, and which I then have to start again when I could have just had 5 properties worth 100,000 in the first instance, more on the rent, max leverage at 75% loan to value, and by this time they'll be worth 120, 125. I'm now refinancing, pulling out 1 deposit per property for another 5, and it's just like, how do you, like, don't tell me you're trying to build a portfolio when you're not trying to build a portfolio. I'll pause for you coughing.
I was trying to hold that in, but you were talking a lot. I thought the sentence was going to be over. Sorry. Proceed.
Sentences are never over.
Please proceed.
Thank you. But yeah, it's like, if you're trying to tell me that you want to grow a portfolio of properties, but then you're telling me you want to buy a property that's worth £500,000.
Yeah. Doesn't make sense.
It doesn't make sense. Like, there is no logic to that. Yet people will continuously, blindly say they know what they're talking about and they know what they're doing.
Yeah. And some people don't even realise that they can do more than one deal at a time. Like, they think that you can only do one mortgage at a time because that's the rules. And I'm like, no. I mean, I've got clients doing like 10 mortgages at one time, or 10 bridges at one time.
Yeah.
Like, you can...
But see, that's the thing, right? I've got £100,000. I want to buy one property for £100,000. Well, why don't you buy 4 properties for 80 grand a piece using bridging for the rest, and use the funds to refurbish those properties,
and then recycle the money,
refinance those properties, and maybe you'll pull out 85,000 on the back end.
Go again.
Or maybe 70,000 on the back end. You've just got 4 properties for 30 grand. You've got 70 grand to go do it again. Right?
I mean,
and you might hit that one jackpot where you get money in, money out.
I've seen one of your clients is just on a beauty of that.
Stunning.
Yeah.
Stunning deal.
Mm-hmm.
It is beautiful. But in that situation, he knew before he went into it, because we sat down and went through the numbers. This is what the property's going to be worth at the end. This is how much money you're going to be pulling out.
Yeah.
So when you're spending 700 and you're pulling out 790,000 once it's done, that property has basically paid you £90,000, and now you've got 1,000 cash flow.
Well, it's an infinite return on investment, right?
Yeah, absolutely.
Can't get better than that.
So it's moments like that where if you've got X amount, there's nothing stopping you from building that portfolio and, taking... Do you remember that brother-sister duo that I worked with? Well, I don't work with them anymore because they stopped listening. But when they were listening, they went from 0 properties to 17 properties in 3 years.
Yeah.
And they started with 50 grand.
Yeah.
They started with £50,000.
Well, you can.
It's because they just listened. They literally verbatim listened to me when I said, right, we're going to do this. This is what we're going to do. This is what finance we're going to use. This is how we're going to use the finance. This is how we're going to refinance. This is who we're going to refinance with. This is like what value we're going to refinance. And they listened to absolutely everything. Got to 17 properties, then thought they were Billy Big Bollocks. Stopped listening. So I was like, all right, safe. See you later.
Mm-hmm.
But it's things like that where it's like the possibilities, the advantages of using finance in the correct way, which doesn't mean your money's all tied up. It gives you the ability to free up your funds to do multiple deals. Mm-hmm. I don't understand why people...
Because you never know when another little nice deal is going to come along. You're doing one and then it's something lands on your lap unexpectedly, and you want to be able to do it if you can.
It's like that deal that's just come that I told you about that I want to do, and you're like, I thought you were done with doing deals. Yeah. The problem is when they come up and they're sexy, because this one's a money in, money out.
Well, mine just fell on my lap, to be fair.
Yeah, but the one that I'm doing is a money in, money out, which is great. Yours is a flip, but mine is like literally the purchase price 75,000, the refurb's 15,000.
Well, they're kind of they're gems now, aren't they, to get true money in, money out deals?
Yeah, it's harder. Yeah, it is harder today.
They're out there,
but they exist.
So when you get one, you kind of got to.
You've got to do it.
You've got to do it. Yeah,
because it's infinite return.
You've got to find a way to do it.
Yeah. So no matter what it is, whatever it takes, I'll borrow it from anyone. If I didn't have the money. All right, I'll ask everyone.
Put it on the Amex. And the points.
Imagine the amount of points on that. But yeah, you've just got to do it, right?
It's
Any angel investors want to invest in me, you can invest in me. I'm dependable. But I think where a lot of people don't see what is possible because then they're not either speaking to the right people or have the vision that others have.
Yeah.
They can't see past their own nose. That narrow-mindedness of, this is what I've been taught, and so that's what I'm going to listen to for the rest of my life.
But I mean, property's not for everyone. But I mean, if you're listening to this podcast, then you're obviously interested in property. So everything we're saying is relevant. Because obviously there's going to be some people that come across what we're saying and just think, well, this isn't for me. And I'm like, well, why are you watching the podcast? but if you're here, you need to understand what we're saying, because we're trying to help you. And it's about not just having, what am I trying to say? I know what I'm trying to say, but it's not coming out. And what I'm trying to say is, it's all right going to someone who has the knowledge like us, and we're here talking about it, but we also take you through the whole process as well. So like the hand holding, because it can be a bit scary when you're first starting out, and you maybe don't have the support of your family, or you don't have the right advisors, or you don't have an accountant, so you don't have anything you're literally just starting out. Because I was there once, and it's really scary because you don't know who to turn to and where to go. But what we do is we understand that. And we take you through the whole process, because once you've done it once, you get it.
You say that.
Once you do it correctly, for most people...
Listen, just a few hours ago, I had a conversation with one of my favourite clients. He's got over 15 properties and he still hasn't a clue how the process works.
But he trusts in us.
Yeah, he trusts in me to different. Just do it, which is fine. I get it. He's like, well, yeah, he's of the opinion, well, I don't need to know this shit. You know this shit. You do it for me.
Yeah, exactly.
Which I get.
Yeah.
But I think that whole, I'm going to cuddle you the whole way through this.
Yeah.
And I'm going to take you from start to finish. And if there's ever a moment that you get scared, you stop, you talk to me and you tell me what you're scared about.
Yeah.
And we'll talk it through.
If you're unsure about something, then you need to come to me first.
What winds me up is when they go silent.
Yeah.
Or they'll start talking to someone else about it.
Well, don't you remember I had that? And I was doing, I quoted on a 2-year fix holiday let, I think it was.
Oh, yeah. And then they came back with a 5-year. And so I asked you if you wanted a 5-year.
I said, do you want a 5-year? They were like, no, because we want a 2-year.
Yeah.
And then they went to another broker and got a 5-year. I was like, well, I just offered you that. And you said no. And then they said something like, oh, well, we didn't know that was an option. I was like, well, that's because you told me you didn't want it. So I'm not going to give you
something that you don't want.
Like, do you want a cup of tea? No, here, have a cup of tea. Like, what? But if you'd have just spoken to me, actually, I've changed my mind. I'm thinking about a 5-year. I could have got your product in like 3.5 seconds.
Yeah, 3.6.
3.6, probably.
Computer's a bit slow.
Yeah, there's probably a glitch in there. Yeah. So, like, come on, just like talk to me. Like, there's always going to be another option, but I'm always going to give you the best option only. The
best one is I give a rate or a terms to a client. They're like, oh, is there anything better? No, bitch. I gave you number 8 in the list because I don't like you.
No, I did eeny, meeny, miny, mo. Actually.
Yeah, it's just like, are you serious?
Or it's like, have you got any other options? It's like, yeah, I've got 20 other shitter options that I could give you.
Yeah.
But like, why would I do that?
Do you want the best option or do you want the shitter option?
Yeah. I'm just going to give you the best option.
It's funny because there are some clients who go through that, and I think I'm sure I've mentioned it before, where some clients like, no matter what it is that you do for them, you'll go to the ends of the earth, and they will still question everything. They will still question everything. I've done this over 1,000 times in the last year, and you still want to question everything.
The fees are the best one.
My fee has not changed since the day I
started.
No,
not our fees. So can I take the valuation payment over the phone or something? And they're like, I've already paid your fee. It's like, this isn't my fee. This is the lender fee. Well, what's that? Why have I got to pay that? Well, otherwise your application won't go in. So it's your choice, mate. It's like 100 quid. Like, and then plus your valuation, which is like 300 quid. Like you've got to pay. It's on the illustration that I sent to you. No one ever reads.
They don't read the illustration.
No, they just see the rate. And then they're like, yeah, okay, that's good.
Yeah. It's just...
Then they call me, they're like, what's the ERC on this? It's on the illustration.
Yeah.
What's the Laval fee? It's on the illustration.
Yeah, it's just... It's one of those things, like, okay, granted, like, people need things spoon-fed, which is fine. I'm here to spoon-feed. But don't question me. Don't question my integrity, because you're questioning whether you believe me. You're questioning whether I'm giving you the correct advice. The moment you question that is the moment we can't work anymore. Cannot work together. Because if you don't trust me, I don't want to work with you.
Yeah.
You either trust me or you don't.
Yeah.
You either believe in me or you don't. And if you don't believe in me, do one. And I will say it every single week.
Well, I had one fairly recently where it's a standard buy-to-let remortgage. However, it's within 6 months, and there's investor funds. So when I'm sourcing, the lender. The what?
I know where that goes.
Yeah, the lenders that are coming up are, no, can't do within 6 months, no, can't take investor funds. So I'm going down the list, finally found one, and it's not an ideal rate.
Yeah.
So I send it to the client. They're like, well, this is just a buy-to-let remortgage. Why is it so, kind of questioning, like, why I'm taking them to this lender? And I'm like, because your circumstances are not straightforward. All the cheaper lenders just won't do it until you wait for 6 months, or you just don't have investor funds, but you do, so I can't do anything about that. We just have to go to a lender that accepts investor funds. If you want to wait for 6 months, which we are now, then fine.
Oh, is this that client that kept saying they're going to pay their invoice?
Yeah. I've got 2 weeks left until I can do that.
I
6
can't
months.
stand people.
I told them just to pay it. They were like, oh, haven't we got 2 weeks left? I was like, yeah, but if you just pay it, then when it comes to 2 weeks, I can just put in the application. Like, you don't then have to pay the fee. Like, if you've paid the fee, it doesn't matter if it's 10 months or 10 days. Like, just pay
honestly,
it.
I can't stand it. It frustrates me. Like, here's your invoice. Pay the fucking thing, right? Just pay it. Don't question it. Pay it. You signed the terms of business. You know what the fees are. Pay the fee.
Although you invoiced me the other day, and I was like, what was this for?
Did I invoice you?
Yeah, from on the accountancy side.
I have Hearthstone Accountants.
Yeah.
Yeah, because
I was like, what's this?
Was it your confirmation statement?
It was.
Okay.
And then I opened it. I was like, So I was like, I haven't done my accounts.
Confirmation statement.
Yeah.
Yeah.
I know that when I opened
I'll
it.
pay for that. HMRC put their rates up.
I paid it. I was a bit late, but I paid it.
But yeah, I mean, I think today I had 27 invoices that I'm chasing. And it's like...
You know what I get all the time? It's like, oh, you haven't sent me an invoice. I'm like, yes, I have. I sent it like 2 weeks ago. They're like, no, you haven't. I haven't had an email from you. Like, it's not from me.
It's from the accountancy
software. It's from the accountancy software.
Yeah.
Like, and plus, like, you would have got like loads of emails from me, invoices from me in the past. Like, you know how to pay the... Then they're like, oh, where's the bank details? If you open
the invoice, it's on the invoice.
It's on the invoice. Like, every invoice in the world, like, it's there. Can you do a card payment? No. It's bank transfer.
No, I can't deal with it. I can't deal with that at all. It frustrates the life out of me. I don't understand. Like, so because I like to pay my invoices like that. And what annoys me is because I don't get paid by my clients, I can't pay my invoices.
Yeah.
And it makes me so angry. Like, it makes me so angry because now I'm not able to pay someone else because some fucking twat isn't paying me. Do you know what I mean? It's like, I'm not a charity here, bitch.
Yeah.
And not only do I have staff that I've got to pay, I've got a business to run, I've got rent to pay, I've got bills to pay. Like, I'm not just here for my health, mate. I don't just take the money and put it in my pocket and say, all right, I'm going to go buy a Lamborghini. Like, it's like, do you not understand how business works?
Yeah.
Right? It's the money cycle. It goes round and it goes round and it goes round, right? It goes from one business to another business to another business to another business. Just stop being a dick.
But that's the same if you don't pay your builders, they're not going to do the work. So you'd think that investors would know.
No, they don't. I'm just going to send CCJs from now on because I'm just fed up.
Yeah,
I get so tired of it. I was like, oh, you're a great client? Right, be a great fucking payer. Pay me. Right? That's amazing. I'm just going to CCJ you. Let's see you get a mortgage in the future. Do you know what I mean? Like, it's just like, it makes me that angry that I want to destroy their future mortgageability because they're not paying my invoices. That's how angry it makes me.
I've got some great clients who I send it out.
That's using finance to your advantage. Fucking CCJ you, bitch.
them.
Let me CCJ you.
Yeah, because then your mortgages are done, mate.
Yeah.
Well, they're not. Well, if you want to pay 10% or something. It's always a way.
Yeah. And when they come back, can you get me a mortgage, please? I've got a CCJ from you.
Yeah.
Oh, great. I'll find the lender. The lender says, why have they got a CCJ? This bitch wouldn't pay my invoice. So I decided to put a CCJ on them.
You haven't had to do that yet.
Vicious cycle. Yeah, but I'm getting there.
Yeah, there's
some clients I'm getting there.
Some outstanding ones have been about 3 months now.
Like, it's just so annoying. So annoying. But anyway.
What's next?
back to using finance to your advantage. Flips.
I love a flip. That's what I'm trying to do one.
Flips. Good way of building a pot.
Like me, because I'm poor. Because I spent all of that money on that Del Boy portfolio, and now I need to just raise some funds, so that I can go again. So now I found this sexy little flip. But that's actually quite a nice case study, I feel, because the one that I'm trying to do, because I'm using collateral. So I have an unencumbered property. I reckon it's worth about 200. So I could raise 150 on it.
150 gross.
Yeah, gross. Yeah. And purchase price is 210. And refurb somewhere, I reckon 80,000-90,000.
So 300 all in.
Yeah.
So you could put 150 gross on one, 150 gross on the other.
Yeah.
And probably have to put in 20-30 grand of your own.
Yeah, and I can either get the works from the lender or
cash.
Put it on the Amex. Just put everything on the Amex. Cash. Find it from somewhere, but then it will sell for 400, 45 maybe.
Yeah.
So it's a sexy little deal.
That is very good. Very good.
Yeah.
Get lending on GDV. You get 100% finance on that.
Yeah.
Go with the lender that lends on GDV.
Yeah. Yeah, I need to speak to them and see how creative we can be.
I'm sure we can be very creative.
Yeah, we can.
Yeah.
Because I don't have that many funds.
That many funds?
That I don't have many funds. There we go. Got there in the end.
I ain't got the dollar, boy.
I ain't got no green. It's a sign of a true investor when you're poor.
Yeah. Yeah, absolutely.
One of the best investors that we've got in our books shows up in joggers with a toothbrush in his pocket.
Oh, gosh.
And he has booked a room. Oh. If he's watching this, he's going to know who he is. He turns up to this conference that we do all the time, and he's in these, I don't know what they are. They're like Puma joggers or something with like nothing matches. It's all different. And then he's got a big hole in the knee. He's got a toothbrush in his pocket, and
he's got no
hotel room. But he's staying the night.
But he wants to go out.
And he wants to go out, but he can't get in anywhere because he's got
joggers on.
I'm like, aren't you like one of the most successful property investors that we know? Aye.
Giving it away now.
Only gave the country.
If anyone caught it, though. But other ways, purchase, refurbish, refinance. Let's talk through the model of a purchase, refurbish, refinance. Let's talk through the finance on that side.
I think it should be the foundation of every good portfolio.
Yeah, but let's talk about the finance of it. So we'll go through a scenario. I'll give you one. I've got a property. It's worth 100 grand. I'm buying it for 80 grand. I need to do 25 grand refurb to it, and it's worth 150 on the back end. Go.
Do you need the refurb money?
Yes.
That's a good start.
Thanks.
So we would obviously bridge it.
Yeah.
We can get 100% of the refurb money.
Yeah.
What was it, GDV?
150.
150. So they would just lend. I'd go to a lender who lends on GDV in that case.
Yeah.
They'd probably give 65% gross GDV. Plus 100% of the works. But the 100%, this is one thing that's really important, is the works is paid in arrears. Because people expect, I can get you 100% of the works, but they just expect to be paid 25 grand to do the works. Yeah. It's actually paid in arrears. So you have to spend it, claim it back, spend it, claim it back. Because it's 25 grand, you're probably on the minimum, right? So you're going to have to spend 25 grand to get 25 grand back. If it was a bigger refurb, if it was like a 50 grand refurb, then you could do 2 tranches of 25, for example.
Yeah.
So it would be a little bit better. So you can either do the refurb, you could put it on the Amex.
For the refurb, yeah.
You put it on any credit card. You can do it through angel funding. You can do it gift of parents. You can kind of get the money however you want. But that's how the refurb money works. And then
refi on the back end and pay it all back.
Refinance it on the back end, get it all back. Yeah, that's in a nutshell.
Thanks.
Does that make sense?
Yeah, you're my mortgage advisor, right?
I am, but
you do my deal for me.
Yeah, but you can't just tell me what you want and I just do it.
Yeah, that's true. But yeah, I think that's it, right? Using finance to your advantage. Many ways to do it.
Yeah, it's just about knowing about it and. Just being around the right people who know about it, who can hold your hand through the process and just know probably those things that 90% of advisors don't know, because that can be the difference between you doing a deal and not doing a deal.
Yeah, absolutely.
It's just by funding it correctly.
Yeah. Well, thanks, Jordan, for joining me.
I'm here every week.
And thanks to everyone else for joining us. I hope you enjoyed it, and we hope to see you again soon. Don't forget to subscribe. Make sure you watch everything. Leave any comments that you have. If you want to bash us, fuck off. If you want to be nice, please go ahead. And we'll see you again next time on Industry Disruptors.